Hello ladies and gentlemen, welcome back to another video. Now it has been a long time since I have actually recorded a YouTube video, and yeah, let's get straight into it. So today I'm going to be speaking about this power of three, this Judas swing strategy, whatever you want to call it. It means the same thing. This strategy actually helped someone in my private mentorship to pass their funded accounts alongside another strategy, another model that is taught in my private mentorship, which you can see on the screen now. If you just read and see, he did pass a 100k challenge, phase 1 and phase 2. And yeah, let's get straight into the video. So the strategy I'm going to be speaking about is we are going to be utilizing the Asian session range. Now the Asian session range begins from 8 p.m. New York time, okay, to of course 2 a.m. New York time. Now let's say this 8 a.m, let's say this 2 a.m. So usually the Asian session range is usually a consolidation, a accumulation phase. Not much goes on, and usually we'll have something like this going on in the Asian session range, or something like this, right? Now the Asian session range, we want to wait for either high or low of the Asian session range to get taken. Okay, so we just mark out the low of Asian session range, and we mark out the high of Asian session range. Okay, so let's say this is 2 a.m. New York local time, and we just extend these lines over here. Now what we want to wait for is either high or low get swept. Now once they get swept, you want to wait for a displacement in the opposing direction. So if we just continue drawing, so let's say sell side liquidity gets taken, so this low, what we want to see is a manipulation move up, right? Sorry, not a manipulation move up, we just want a move up. Essentially we want a displacement move up is what I meant. So a displacement move up with a market structure shift. So go to your 5-minute time frame or your 3-minute time frame and wait for a market structure shift. So the market structure shift may be somewhere here, and then wait for a PD array to enter off of. In this example, in this video, I'm going to be entering off of a fair value gap, right? So a displacement with a fair value gap, and then entry at the fair value gap, stop loss at the low, and then take profit at the Asian session high, so over here. However, remember, we can also have the Asian session, the mid of the Asian session, right? So you can also target there for partials or moving stops to break even, etc. Okay, and of course vice versa if the roles will switch. So if price goes to take out a buy side liquidity, so this high first, we want a displacement move in the opposing direction, so displacement move down with a fair value gap, a market structure shift, and then enter shorts on the fair value gap, targeting the low or targeting the mid of the Asian session range. Now I'm going to go in an example, it will make much more sense, sorry. And yeah, okay, so here I have Euro USD. I'm just picking Euro USD as an example. You know, it can work on anything else, on any other market, the futures index, any other forex pairs, any other majors especially. And yeah, so here we have the Asian session range. So we have this range here, and I've just gone on indicators, and if you just search Asian session range, it will just automatically give you the Asian session range, and you can see that from the time, if you look at the bottom, that is 8 p.m. to 2 a.m. New York local time. Now what we want to do is now mark out the high and the low, and we're going to wait for either of these to get swept. Okay, so it says 130 here. However, if I just put this one, so 145, so this candle actually opened at 145 and will end at 2 a.m. So marking out the high and the low, we're waiting for either of these to get swept. So let me just put this forward. So we have now swept the low. What we want to look for now is go down to the 5-minute time frame and now look for the displacement move up, like I was speaking about. The displacement move up with the market shift and the entry off of a fair value gap or order block, whatever it may be, any PD array. So if we go to the 5-minute time frame, we will just wait for a market structure shift. We will just put price forward and see what it gives us. So put this forward. So here we have seen price make a high and put in a new low over here, and this is a swing high which has put in a swing low. So this is going to be our market structure shift if price trades above it. And then we just wait. Okay, cool. So we can see that price trades above it, and what do we see? We have this nice little displacement move, and what does price leave behind? A fair value gap. Now we're going to enter off this fair value gap and wait until price taps us in. Stop loss at the low and TP at the Asian session high right over there. So at a 2.1 R. Okay, so if I just put this forward, so price now taps us in, and if I just change this to there, now price taps us in, and let's see what price does. Okay, so we're just playing about, moving up, and there we go. We hit TP. It was pretty choppy, but we still hit TP. Now with this strategy, you have to be careful. Make sure you also align your daily bias with this strategy. It will make it much more powerful. This is very easy. This is very simple to use. However, I'm not saying to you it's the holy grail. Remember, you need psychology, you need risk management, you need position management, you need to know when to take partials, etc. Okay, make sure when you are trading this, there's no news events when you're about to trade. Okay, so you can use forexfactory.com, their website, and see if there's any news events that will impact, your trading, because news is, as a whole, it is unpredictable, and you never know what's going to happen in the markets. There's a lot of manipulation, there's a lot of distribution, a lot of things. And yeah, let's just get into another example. Okay, so here I have another example. So we have the Asian session range. So at 8 p.m. New York local time to 2 a.m. New York local time. It says 1:45. Of course, that's closure. And now what we're going to do is we're going to wait for either high or either low of the Asian session range to get taken. Okay, so we'll just put price forward and we will just wait. Okay, so we can see that price has actually took out sell side liquidity, the Asian session low, and now we drop down to the 5-minute time frame and see what the price actually does. So let's put price forward. So originally this should be our market structure shift. Okay, so we have now got that market structure shift right over here. So this high, which put in this new low, we have actually traded above that. That's our market structure shift. We've had a little displacement move up, and we have this fair value gap to enter in. Okay, now you may look and think, well, what about this fair value gap? Well, this fair value gap, it's already been traded to, it's already been repriced, it's already it's already been rebalanced. Essentially, it's came into this fair value gap and moved away. Now we couldn't have used this, and we still cannot use this because we did not have a market structure shift before that, right? So what I'm going to be using is this fair value gap here. I'm going to go long. Well, I'm going to go long here, and then my stop will be, well, my stop loss will be somewhere around here, because I know if price comes lower below this fair value gap, that price will most likely come and take out this low. So my stop loss does not need to be at that low, unless I'm just holding it accountable for spreads, etc. And then my take profit is of course going to be this high, this Asian session high. So this will be a 3.2R, and yeah, let's just put price forward and see what happens. So we have been tapped in price. So we've been tapped in, and now we expect to move it away. Right, let's put this forward. So here I might take some partials, move my stops to break even. Okay, position management. And let the rest run and play out. And then there we go, we hit TP at 3.2 R. Now you may be thinking, okay, this is all done in hindsight. Well, back test yourself, see what happens. It's a very simple strategy for those that, you know, that are looking for just a simple strategy to use day in, day out, something mechanical, you know. And if you pair this with the daily bias, you know, it's a lot more powerful than you think, because you know where price is most likely to go for that day. If you pair this with this model, with this setup that aligns with that bias, then it is perfect. Okay, now I'm not saying this is the holy grail like before, and yeah, I hope you have enjoyed this video, ladies and gentlemen. We have come to the end of the video. Please check out my Instagram and join my public Telegram channel, which is linked below in the description. Be sure to check it out. I post a lot of gems, a lot of free content, a lot of help in that free Telegram channel. And if you are interested in joining my private mentorship, that will be linked below too. There's a lot of stuff that goes on in there, a lot of private educational content too, you know. And yeah, until next time, guys, take it easy.